Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, February 13th, 5:51 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. You can tell by the color of the what just happened stats that Valentine's Day came a little bit early to the market today, and that's not a good thing. State of the market, we're in an uptrend since the O'Neill follow-through days on November 1st and 2nd. You can see over here on the trend gauge, we're still showing 4 green arrows despite the carnage today, and we'll get all into that momentarily. Market leadership still showing a green arrow, but a yellow sub-arrow, as a couple of recent leaders either had bad reactions to earnings or just bad days today and didn't show their true leadership quality. They say the strength is revealed in the pullback, and we really have about a dozen or so names that really stood out today. We're going to go over them in this report. And as far as the 5 major indexes go, small caps with another close below the 21-day moving average is the only bad mark. The rest of the indexes and time frames are all showing green. That's a short-term 21-day, medium-term 50-day, long-term 200-day moving average. So what happened today? It was inflation rearing its ugly head as the CPI report came out before the open, and both headline and core numbers on a month-over-month and year-over-year were worse than expected, and immediately yields popped, stocks sold off, continued to sell off into the open. Some brief rallies during the day, but an ugly day all in all. Let's get into it. Final numbers. The Big Seven, really not a bad day. They have solid balance sheets, and this is where money flows when things get dicey in other areas of either sectors or growth versus value. Big Seven down an average of 1.4%. Remember, our Big Seven does not include Tesla, but does include Netflix. Would have been worse if we included Tesla, not by much, but still. RG8, 3 years ago, almost to the day, a terrible day in the market and a bad day for Revere spawned something that became part of our process, and that is monitoring 8 growth ETFs for overall health of the types of stocks that live in the pond that we fish in. And this was not what you wanted to see today, down 2.89%. Kind of told us something that we didn't know coming into today. S&P 500 gap down 1.3%, was down as much as 2%, cut that 1.3 nearly in half, and was looking like it was just going to be no big deal. But then a 3-hour trend down to the lows of the day before a late rally gave us the final numbers. Equal weighted, even worse, down 1.7%. NASDAQ 100 down 1.6, equal weighted down 1.76. Dow down 1.35. Here's the problem. Mid caps down 2.44. Russell 2000 small caps down just about 4%. Global 60/40. If yield spiked, that prices were down, bonds didn't help. Stocks down 1.22%. We had a relatively good day in-house, all things considered. GROTECTION down approximately 1.07%. Let's get into it. We'll start with the S&P 500, and you can see a very clear change in character. What hasn't changed is that we're still trending above the 21-day moving average. We did close near the top of the intraday range, although if you include the gap down, we didn't. 8-day exponential moving average has rolled over now. Today's lows become critical, as today is an inflection point with the combination of news and a bad reaction. So today's lows are critical both in the indexes and also in stocks. And that green line, our 21-day moving average, is a governor that we use for our short-term health of the overall market. So still holding above there. but plenty of other reasons to pull the ripcord on some holdings today. NASDAQ 100 also held the 21-day moving average, also below the 8, which has, and the slope of the 8-day has rolled over. Dow Jones Industrial Average undercut and reclaimed the 21 by the end of the day. So good stuff there. Also held the 38,000 level before bouncing. Now the bad news, mid caps. Undercut but held the 21-day moving average, and the slope of the line is still higher. But as of now, this is a failed breakout out of this flat base that we highlighted the breakout of yesterday. Still above the uptrending 50-day moving average, but down 2.5% is very clearly not good, and even worse. Small caps below the 21-day moving average, which has now rolled over. Failed break above this 200 level, closed right on the uptrending 50-day moving average, down 4.11% on the day. Not good at all, and we'll show you a couple more charts why here in a minute. The VIX got as high as 18 intraday before coming off late in the day as we had a bit of a rally into the close, but now above the 2150 and 200-day moving average and this 15 level that we prefer it to be under. So as if these are all, it's a red flag. I mean, there's a lot of secondary indicators. You stack them up. If there's too many of them, eventually it trickles over into the price of the overall market and reaffirms what we're seeing in price and volume. Always exceptions, of course, and that's what we'll point out toward the end of this video. So there's the VIX, here's the dollar. This broke out above this little flag. That's, again, not good. Another secondary indicator that's not in our favor right now. Not even going to show gold stocks because they're terrible, but GLD also gapped down 1.4%. Bitcoin, a pretty decent day by the end of the day, recovering. In fact, an inside day, only down 1.64%. That's kind of considered a victory. On bonds, bond prices breaking down. There's the broad bond index. Here's the long bond index breaking down. That means we see a breakout in yields, and this is absolutely not good. Above this 44.25 level, so a breakout on the 10-year. I'm sorry, the 30-year. TNX, the 10-year, a breakout on that above the 42 level. Even the 5-year, a breakout there. Very clearly and strongly up 4.6%. So this is not good. The chances of a rate cut on the Fed fund futures plunged. We're looking at a possibility of, and I think it's a below 50% possibility, but of a June rate cut now, and that's not what the markets want, and that's terrible for growth stocks. And let's get to the tail of the tape and dive in a little more. Today's action turned a lot of our indicators negative. All 5 of the major indexes hooked down, the stochastic hooked down from overbought. Same thing for the RG8. NASI RSI turned up last night. We're expecting to turn back down today when that chart gets updated. The dollar turned up and broke out, and rates turned up and broke out. Terrible news. If you're a bull, and here's the summary of the news, as I already said: CPI hot across the board, futures down, yields up. Day count, 1 day down, 1 day close below the 8-day exponential moving average, still 27 days above the 21-day moving average. As far as sectors go, the only thing green today, bond yields, the dollar, and crude oil. 11 out of 11 spider sectors down. The worst of the down sectors, builders, because they're interest rate sensitive, banks, biotech, retail, semiconductors, software, and solars. So in-house, what do? We take a step back. We keep a chart with all of our stops, and those are a worst case scenario. We did a bunch of discretionary selling today, just on the thought that, for example, small caps and ARK didn't hit our stops. But seeing the devastation in the individual holdings, and as much as they were down, we still got out with either a small loss or a small gain with these. But something changed today, and that's the interest rate environment is not favorable to small and mid cap growth names. So now we wait and see for the market to flesh out what they decide. This may be a 1-day aberration. I would be surprised if it is, but I've been surprised plenty of times before. So we got out of the things that were either had extremely high beta, were smaller in market capitalization, weren't considered true market leaders, or haven't proven themselves as that. And as a result, we sold UWM, ARK-K, NXT, and Palantir. We trimmed uranium. That's sitting on the 10-week moving average, the small position we had left. Now, some stocks reported earnings and were all down pre-market. Immediately, Datadog turned green within 15 minutes. We took a small position in this. We ended up down. It ended up down 2.35% on the day. So we won't give the dog a long leash. But this adjusted, we've been trimming as we're trending higher above the moving averages. We trimmed our adjusted beta to below 1, now 0.84 as the bottom line. Hot CPI report spikes yields in the dollar, hits stocks hard, especially mid and small, and especially growth. Now let's talk about 10 or 12 names that are survivors and held up just well. I'm going to go to our portfolio first of all. The buy, Datadog. Gap down, bounced at the 50-day moving average. You see a lot of leaders that sold off early and recovered very nicely today, and we're going to hit a couple of them here. So Datadog was our buy. Palantir was holding up very well, but again, this is a very volatile stock. And just not something I'm comfortable holding if the market has indeed changed character. NXT, same thing. Great a great solar stock, but that's like saying you're the cleanest dirty shirt. As the chart looks fantastic, solar is like the one of the 20 worst sectors. TAN itself had 2 days of rallying, but then today was down 6% on the day. So I don't trust this stock, so we sold it. We bought Datadog, NXT, Palantir. I talked about that. Okay, ARK-K. We sold this, and this is a discretionary market call on weakness. Broke the 50-day moving average, sitting right above the 21-day moving average. I already showed IWM, which indicates why we sold UWM. Now let's get to some good names, some things that held up or actually finished green, and you're going to see a lot of them bouncing at the 21-day moving average or undercut and reclaiming. These are in the portfolio. CrowdStrike finished positive. NVIDIA flirted with green most of the day, bounced at the 8-day exponential moving average, finished just barely negative. AMD showed relative strength, undercutting and reclaiming the 21-day moving average. Uber showed relative strength all day, bouncing off the 21-day moving average. Eli Lilly was green pretty much all day, right at the top of its range, up almost 1% on the day. So those are some very clear relative strength in names that we already owned. Here's some that we don't own that acted great. VRT bounced at the 21-day moving average. SMCI, the champion of stocks right now, didn't even come down to the 8-day exponential moving average. If you were bold and you bought the pullback, my congratulations to you. Spotify finished positive on the day, undercutting and reclaiming the 8-day exponential moving average. Celsius has been regaining strength, bounced off the undercut and reclaimed the 8-day moving average. Wing, maybe a lot of wings were consumed in the Super Bowl. That undercut, reclaimed, and finished positive on the day. And Abercrombie and Fitch is just a thing to behold. Positive reversal finishing to the upside. So that's about a dozen stocks that very clearly held up today. Some other things that had been holding up and didn't. ARM down 19% today. Still, kind of close to where it closed on its first day, looking like yesterday was just an absolute blow off. But we'll see what the other days bring. So some other stocks that were down pre-market and stayed down, ANET, although it closed right on the 21-day moving average. And these are stocks that had been leaders. CDNS, undercut but held the 21-day moving average. Shopify did not. This is a failure, closing below the 50-day moving average on heavy volume. After hours, Airbnb was up, is down 4.5% after hours. And Upstart now is a broken leader, down 21%, broken former leader, down 21% after hours. So Today's lows are critical for anything that held up well and showed relative strength. That's why we still, have 6 names in-house in addition to our core position in the S&P 500, and we'll see what tomorrow brings. And that's about going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, my partner Dan Stewart can be reached dan@revereasset.com. Will we go back into protection mode as part of our GROTECTION strategy? Well, certainly we have been, as we've been trending higher, and names were getting more and more extended. We've done a lot of offensive selling over the last week or so, but we're holding the 21-day moving average. Today's lows are a line in the sand, defending, and that will dictate whether or not, and of course the names that we have remaining in the portfolio will dictate whether we get more defensive or flip back to growth mode if today ends up being just a blip on the chart when we look back. And that'll wrap it for Tuesday, February 13th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.